Good morning, I'm Michael Gable from Fairmont Equities. These are our stock tips for Monday the 15th of August. Please make sure you're familiar with our disclaimer. Any advice is general only. The first stock we're looking at today is Mantra Group. So Mantra's finding some very good support down here. We're seeing a lot of volume coming into the stock. Consensus targets are up at $4. Mantra reports on Friday, and what I'm expecting is, because there's a lot of negativity priced into the stock down here, as long as it doesn't have a bad result on Friday, we should see the stock pop up. So this is what I could see on the chart. This is the weekly chart of Mantra Group. So some very good support just here under $3. You will notice that looks like we're probably getting a break here of this most recent downtrend, and ultimately I think it could trade up towards $4.20 if they report okay. So I'm happy to buy Mantra Group here leading into the result on Friday. The next one's REA. Just a quick update. We did mention REA a few weeks ago, and I warned that trading up at $65, it was looking quite risky, charting wise, valuation wise, running into their full year results. So the stock did get hammered down to $55 as predicted. It has bounced since then, but I think it's going to use up a bit more time here. So this is what the chart looks like. So basically got smashed over the last few weeks. This $55 level is where I'm expecting REA to settle down over the next several weeks, possibly a few months. So hopefully you sold it when we recommended that a few weeks ago. From down here, I wouldn't recommend buying it. As I say, it should settle back down towards 55, and then you can look to possibly pick it up then. The next one is Blackmores, another one that we did cover a few weeks ago, but I just want to update you because I mentioned at the time that we're very close to getting a buy signal on the MACD, and we now have that. And there was a little bit of short-term resistance around $160. That has now been breached also. So Blackmores, to me, looks like it should continue to head even higher now, and this is what the chart looks like. So, you know, we could see that great week last week, mainly as a result of last Friday, rallying on really good volume, and this is the buy signal there on the MACD. So if you didn't buy into Blackmores, I think now we have enough confirmation that now is a good time to pick up some shares. And the final one today, ANZ. You probably would have noticed, of all the big four banks, their trading range has been fairly choppy this year. ANZ's actually been quite an underperformer earlier in the year, but now it's starting to get a move on. So I think of all the big four banks, we could see ANZ start to outperform as it goes from the cheapest bank to something a little bit better than that, hopefully. So if you have a look at the chart, I mean, this is the choppiness that I mentioned, and a lot of the other big four banks are still around here. Still looks very messy, but ANZ's clearly popped its head above this key resistance level, and I'm targeting levels as high as 28 if we breach that, a little bit over $29. So you'll probably find over the next few months, 3 to 6 months, that ANZ actually starts outperforming the other banks as it starts to catch up. That's it for my trading tips today. As always, you can visit the website to view the blog, download some free research, and we'll see you next week. Thank you.